if you want to get in stack mode, if you want to start investing, getting in your bag and increasing your income, then the stock market is going to be a great way for that. Here's going to be the ultimate investor guide, and let's jump straight into it. So what is the stock market? The stock market is a public marketplace where buyers and sellers trade shares of a company. And when you buy a stock, you're buying a small piece of ownership in that company. This allows companies to raise capital to grow their business, and it gives you a chance to share in their success. And in simpler terms, it's a way for people like me and you to invest in the world's most successful businesses, or even new businesses, from tech giants to local food brands, or even just startup AI companies that just came out. Okay, there's going to be a multitude of selections that you guys are going to be able to invest in, whether it be at any type of companies, from brokers, AI companies, food companies, any type. Okay, and there's also going to be what's called stock options, to where you can get paid based on the prediction and the direction of a stock. Okay, there's going to be calls to where you can get paid based off if you think a stock is going to go within an upwards direction, and you can get puts, which is where you can get paid based on do you think a stock is going to go in a downwards direction. Okay, but shares is when you're just going to be buying value and owning a piece of the company, and you're going to make money a lot of the times when the stock is going to be going within an upwards direction. Shares are going to be also something where they're going to be taxed less if you hold it for a year. Okay, for instance, okay, a lot of the times year-long options can be extremely expensive, so shares a lot of the times can be a better options in the stock market. And if you hold shares for longer than a year, then your tax that you're going to have to pay on the trade is going to be less than if you sold a trade within the same year. Okay, so if you're holding shares for years, there's going to be tax benefits. So I really do recommend you guys look into a company that you really do trust. And at the end of this video, we're going to go over the stock market chart, going over how to read support and resistance, okay, how to buy at the lows, how to buy the dips, and catch sweeps up. Okay, it's a really, really great way to make some good income, especially just by reading the chart. And instead of buying the McDonald's, we buy the stock, for example. Okay, let's keep going. So essential terminology. Let's talk about what a stock and a share is. So a stock and a share is a unit of ownership in a company. Okay, and exchange. An exchange, also known as a marketplace, is where stocks are bought and sold. Okay, and a brokerage, it's a firm that facilitates the buying or selling in stocks for you. Okay, you have like Charles Schwab, Robinhood, I use Webull, for example, and there's going to be many other brokers that you guys can use in order to trade and sell your stocks. Okay, and a dividend is going to be a portion of a company's earnings paid out to its shareholders. Okay, and portfolio, a collection of all investments that you own. An index, it's a statistical measure of change in a securities market, like the S&P 500 or the Dow Jones, also known as US 30 or YM. And there's also going to be the NASDAQ 100 too, also known as NQ or QQQ. That's what an index is. So the big names that you guys trade on, like futures, for example, that's what an index is. And why invest in the stock market? What's even the worth of it? And investing in the stock market is one of the most effective ways to build long-term wealth. Okay, before we talk about inflation hedge or anything else like that, okay, it's just going to be a really good way to just park your money. Instead of you guys spending it on consumerism, spending it on more TV, more fast food, buy some groceries, save your money and buy some stock. Instead of going out to the club, buying substances or doing anything unnecessary like that, okay, buy some stock, put your family in better position, build some long-term wealth. Okay, instead of buying game currency, buy some stock. Okay, because when you're buying game currency, all you're doing is making a business owner richer. And if you're a gamer, I really advise that you guys quit games. Okay, games are doing absolutely nothing for you. Stop buying game currency, stop wasting your time on video games, and put that money into the stock market. Okay, understand how the chart works and position yourself and your family for a good financial position, so then you guys can take stress off. You guys can go have nice family vacations. You guys can go eat a nice meal with your family. Okay, inshallah. Okay, so let's invest in the stock market so we can, instead of spending all that time at work, instead of having to work 2-3 jobs, okay, you can just work one job and invest on the side and let your wealth compound itself. Okay, investing in the stock market is going to be a really good way to multiply your money. Okay, money that you guys would, instead of just having it sit in the bank account, because guess what? Banks are actually trading with your money. So banks do not just set up bank accounts for free. What they're doing is they're trading with your money. Okay, they're trading with your money and they're investing in the stock market. There's a reason why you can't go to the bank. So you have 20 million in the bank. You can't go get all of that in cash at once. Why? Because the bank doesn't have that. Okay, the bank is doing lending. They're moving all the money around. They're investing the money. Okay, and then they're going to get it back to you eventually, but they got to make a play first. They got to put everything together. Okay, so understand that's how banks work. So if banks are investing the money, why are you not investing the money? Okay, in order to get rich, we have to be doing what the wealthy are doing. Okay, so let's talk about inflation hedging. Okay, inflation is going to be when the economy rises in price. Okay, and you can use stocks as a good way to hedge inflation. And stocks have historically outplaced inflation, protecting your money's purchasing power. Okay, so instead of the dollar going useless, you guys will have some stock value, and compounding returns. Reinvesting your earnings can lead to exponential growth over time. Or you guys could even be invested in like gold, for example. If you don't have the actual gold resource, you could buy some gold shares, for example, things like that. Okay, you can also invest in currencies. Okay, so that's also going to be a reason why the stock market's going to be really good, to where you can digitally buy currencies as well too. And reinvesting your earnings that you get from your business, from work or whatever, can lead to exponential growth over time and pretty quickly as well too. Depending on whatever industry you guys invest in, whatever stock or play that you guys do, you're going to be able to get that money back to you, back in your account, inshallah, at a compounded rate. So instead of buying 4 bands on the Rollie, 5 bands on the Rolex Datejust, put 5 bands into some stock, let that multiply itself. Once you 4 or 5x your money, take out 30% for taxes, and then go buy the Rollie, and then you're going to have some more money left over. Okay, so take your time, stay down, stake in your race. God has a plan for you. Invest at your time. Invest however much you can at a time. Okay, and accessibility. Modern technology has made investing easy and affordable for everyone. So grind, try your hardest to just get capital so then you guys can go ahead and buy more stock. Okay, you guys can buy more shares of whatever you're trying to get into. And inshallah, you guys are going to be able to compound your wealth at a faster rate. So right now, you got to just head down, grind, wake up, pray to God, grind, wake up, pray to God, grind, wake up, pray to God, grind, over and over and over again. Okay, just really getting your bag, especially when the market dips. Okay, don't get scared. Okay, that's actually going to be a great time when you guys are going to see whales buying. Big buy, and whales are going to be people with millions of dollars, hundreds of thousands of dollars putting into this one big position. Okay, so once again, trading is an aspect to where you want to be doing what the big players are doing. Okay, so let's grind hard. Let's keep getting capital so then we can have some more shares. We can have some more stock. Don't stop. Don't let anyone stop you. Don't let anything stop you. Okay, I don't care what anyone thinks of your investing journey. I don't care what anyone thinks that you're with the whoop, you're driving with the whoop. Whole time you got money put up. Whole time you got plays working out. You have investments working on your favor. Ignore everyone. Just trust God's plan for you. Stick in your lane. Keep investing. Let everyone think you're broke. Who cares what everyone else thinks? Do not do things for anyone else's gratitude. Okay, unless it's your family, your wife, your husband, something like that. Okay, people who really love you, your mom, your dad. People who really love and care about you. Other than that, don't go drop 500,000 on the lamb when you could go invest first, triple that money, and then go buy the lamb. Okay, so make your plays first. Even if you have the bread, reinvest in. Always keep getting more money. It's about keeping the money, because no matter how much money you've gotten, it's many examples of people winning the lottery, blowing through it, getting big contracts, blowing through it. Okay, so don't blow the bag. Keep the bag. Reinvest over and over again. Keep that money in the stash. Stay in stack mode. Keep grinding. Going to be dropping an app for you guys to track your finances as well too here in a couple of weeks, inshallah. Let's talk about some common investment strategies. So long-term investing. Long-term investing is really going to be when you're just buying shares. And once again, you guys are going to be ideally wanting to hold over a year, okay? Because you guys are going to get a lot of tax benefits when you do that. Okay, so find a good stock that you believe in. Ideally, as of 2025, AI stocks are really good. Crypto stocks are really good. Okay, anything related in those sectors, go ahead and invest in something solid and secure. Try to buy at the lows. Don't buy at all-time highs. And at the end of the video, once again, we're going to go over the chart. But buying stocks and holding them for years or even decades to benefit from market growth. This is going to be one of the most consistent ways to grow your money. Once again, not financial advice. This is for financial and it's for educational purpose, not financial advice, but educational, informational purposes. But a good way to keep growing your income consistently is going to be investing in a solid stock. Okay. So instead of just having your money sit in your bank account where it's going to pretty much have no growth factor added to it, investing in a solid stock at a good low or investing in something that continuously grows year after year, or a company that has some future value. Investing in the future value is really where you guys are, inshallah, going to be able to make some money. So let's talk about value investing. Finding stocks that are undervalued by the market and buying them with the expectation that their price will eventually rise to reflect their true value. So find stocks that are undervalued by the market, buy at the lows. Once again, try not to buy at all-time highs, and then you guys are going to be able to go ahead and profit off of sweeps, inshallah. And growth investing. Investing in companies expected to grow at a faster than average rate. These stocks often don't pay dividends as profits are reinvested back into the company. So the importance of diversification. Diversification is the strategy of spreading your investments across different assets to minimize the risk. Okay, so you can spread it out. Okay, I recommend you guys do like 1 to 5 stocks. Okay, like 5 stocks max, and diversify your portfolio. Buy different types of lows, different type of suites, maybe a different type of sector. You know, if you want to do like a crypto sector, then okay, do that. Whatever you guys are comfortable with, whatever you want to do. Okay, just do your research and invest in things that you are comfortable with. Okay, don't let anyone else tell you that your investment's not going to work. Okay, just whatever you believe in, stick to your view, believe in your view, and go ahead and do that. And by investing in a variety of industries, companies, and asset types like bonds or real estate, for example, you can protect your portfolio from a single bad performance. And a great way for beginners to diversify is through index funds or ETFs, or just single stocks as well too. Tech stocks, AI stocks, crypto, a lot of different options you guys can do to go ahead and invest your money. Figure out what's best for you, figure out how much risk you guys want to put down, and figure out how much volatility you can handle. Okay, once again, these are all going to be things that is going to be based on God's journey for you, the amount of risk appetite that you have for yourself. Some people like futures more, okay, and trading crypto on the side. Some people like bonds and trading straight shares, okay. Some people like penny stocks, okay. Whatever you want to trade, you do your research, do what you like, okay? But just know that the stock market is going to be a good way to increase your income once you catch your flow, inshallah. So how to choose a brokerage. Your brokerage is your gateway to the stock market, and key factors to consider include fees and commissions. Look for low or zero commission trades, okay? So brokers have typically low commissions, especially when you guys are not trading like every single second. When you guys aren't making 100,000 trades a day, like some futures and forex traders are doing, okay, you guys aren't going to really have to worry about fees and commissions. And ease of use, okay. Robinhood, Webull, some other good examples are going to be really, really good. I like Robinhood and Webull just because they have instant transfer with the card. Okay, Robinhood even has its own card to where you can keep track and transfer money, say for taxes, or even profits that you want to go spend at the store for some groceries, or even pay your bills with it. And investment options. See what the broker offers. Do they offer stocks, ETFs, and other ETFs that you're invested in? Okay, and want to get invested in. See if it has options if you want to play that. Okay, do research on your broker. Once again, trading is going to be very personal, so I can't just sit here and give you guys straight financial advice. It's going to be all educational, informational advice, okay? Because it's depending on whatever you want to specialize in, okay? But I'm just giving you guys the broad view of information. I'm letting you know that there's a lot you can get into, and depending on whatever you want to get into, choose your strong suits and invest into that. And many brokerages offer free articles, videos, and tutorials teaching you guys how to use it, and customer support too. You guys want ideally a customer support team that's going to be extremely responsive, getting to you, because you're going to be dealing with your money here, okay? When you're dealing with figures, you want to be making sure that the team is going to be taking your account seriously, okay? So sticking to bigger brokers is going to be a really good way to ensure funds, and also make sure that you guys have researched the security on the broker too. Some brokers have around like $2 million plus. So if the company shuts down, if you have $2 million in your account, you know you'll get your money back. Okay. So basic stock analysis. Before you invest in a company, it's wise to do some research. This involves 2 main types of analysis. So fundamental analysis. Look at the company's financial health. Is it beating earnings? Is it steadily growing? Are people investing into it, such as other big companies, hedge funds, or big players? Look at their management and see what type of industry it is to determine its intrinsic value. Key metrics are going to include its revenue for earnings, the earnings per share, and the amount of debt that the company's in. Also, once again, see if there's any other big investors, or see if the company is tied or connected to any other big companies as well too. And technical analysis, which we're going to go over here just in a second, is analyzing past market data, primarily price and volume, support and resistance, to identify the patterns and predict future price movements. This is often more complex and used by short-term traders, but long-term traders, you still need to know how to read the charts too. Still going to be just as important. Going to put you at a significant advantage too. And investing in the stock market comes with both risk and rewards, and it's important to understand this before you begin. Let's talk about the risk. The value of your investments can go down, and the market can be volatile, and you can lose money. Okay, always keep that in mind. But the reward, and stocks have historically provided strong returns over the long term, especially when you're buying at the right times, buying the right stock, and investing in the future within a strong time, outperforming other asset classes, and saving a lot of time. You have full control over your money all of the time. You can instantly sell, withdraw, and just make sure you do your taxes on time. And the key is to manage your risk through diversification and have a long-term get-rich-slow mindset. Only invest what you can afford to lose. Don't be trading with your rent money or anything like that. Don't trade out of desperation or survival mode, because then you guys might crash out and do some irrational decisions that you wouldn't have made if you were just taking your time. So let's go over how to read the charts. Let's jump into it. All right, let's talk about how to read the stock market chart. So ideally on the stock market chart, you want to be reading your higher time frames. The reason why a lot of people aren't successful when it comes to reading the chart is because they're too focused on the smaller time frames, blocking their vision, and you're not seeing the real bigger picture of absolutely everything. Okay, so starting with the logistics, as you can see on the daily chart, the goal of the stock market is for people to invest their money and for it to go up by buying and holding. Okay, so you want to be buying at bottoms and wanting price to go within an upwards direction. Okay, so from 2020, price was around $23 a share. Okay, and price is now $81 a share. Okay, so in a couple of years, the stock has turned up quite a bit. Okay, so that means that people were able to make money by just buying and holding. Why? Because Wells Fargo, for example, is a company that has future value. Okay, according to historical value. Okay, we can check that by a few reasons. One, down here. So this is TradingView, and it shows me where the earnings are. A lot of brokers show this, but when you see companies beating earnings consistently year after year, month after month, that's going to be a really good sign. Okay, and let's talk about how to read support and resistance. So support is going to be when an area decides to bounce. So you want to be focusing on your daily and your 4-hour time frames whenever you're reading support and resistance. Okay, focus on your daily and your 4-hour time frames, because your higher time frames are going to give you the full vision, so then you can actually see everything on your screen with the bird's eye view. Okay, so support is going to be an area where price decides to bounce within an upwards direction. Okay, so whenever you see price bottom out and bounce within an upwards direction, that's going to be called support. Okay, so support is going to be an area where buyers are going to be stepping in. Okay, it's going to be where people are wanting to buy, expecting to make money by price going in the upwards direction. Okay, so that's support, and here's going to be an area of support. Okay, and let me go ahead and mark out this zone because I want you guys to see something. Sometimes area of supports can actually react off of each other. Okay, so sometimes price can come into the same area of support and bounce within an upwards direction. Okay, so that's going to go ahead and be support. Let's talk about resistance. So resistance, and a lot of the time, the strongest area of resistance is going to be all-time highs. Okay, for example, resistance is going to go ahead and be an area where price decides to fall within a downwards direction. Okay, so once again, resistance is a place where price decides to fall within a downwards direction. Why? That's because sellers are stepping in. Okay, so sellers are stepping in because logically, this is a left to right chart. So if people bought all the way down here, they got to sell at some point. So resistance comes in whenever people are selling. Okay, and once again, people are selling because they're taking profit. They're trying to get their bread. They're trying to go to vacation. They're trying to go to Jamaica. They're trying to do what they need to do with their profits. Okay, so whenever you see market going down, all that is people selling. Okay, and let's talk about how resistance and support correlate. So in a bullish scenario, a lot of the times in stocks, you're worried about making money when it goes up. So ideally, the best type of setup is going to be either when an area of resistance gets broken. Okay, So price can't progress upwards until an area of resistance decides to get broken. Okay. So once the resistance finally gets broken, then price decides to give us a close. So from my 4-hour time frame, and I get a second candlestick above the zone. Okay, we never want to enter on the first candlestick, but if I get a second candlestick, okay, then above the zone, then I can go and enter that for resistance breakout and take that into the next area. Okay, so let me go and find an example for you guys here. So I like to go ahead and check out my stock screener here, and I'm going to go ahead and see if I can just easily find a trade for you guys. Okay. So let's just say Uber, for example. Okay. So I'll go ahead and I'll get on my daily time frame here. I can go ahead and see here. Boom, I can go ahead and see here that the area of resistance is being created right here. Okay. Why? Because I see price falling down multiple times within the same area. Okay. So this is resistance. Okay. And if I see price decide to break above this area, okay, and give me a close, I can assume I can go ahead and take that and take the trade up to the next area of resistance, which is going to be right here. Okay, so the resistance breakout is going to be a good way to take trades. And let's talk about the pullback method. Okay, so trading the pullback is going to be extremely effective. Okay, so instead of buying at the highs, waiting for price to progress forward, you can actually wait for price to dip down. Okay, so once again, I like to go to my daily time frame. And what I'm going to be looking for is either an area of support or resistance. Okay, so I could wait for a pullback, maybe like right here at this area of support, or maybe this area of support. Okay, or even here. Okay, or I could wait for an area of resistance. Okay, so I'm gonna go to my 4-hour time frame, check everything out here. Okay, so I'm looking at these areas of support here. Okay, I'm like, okay, price could potentially give me a pullback at any of these areas of support. Okay, and another thing I could look at here is there going to be resistance below me? Okay, so I ask that because a lot of the times resistance below current price can turn into what's called break and retest. Okay, once again, it's going to be called break and retest, and that's going to be when an area of resistance is broken, and then that area of resistance gets turned into support. So let me show you an example of this. So an area of resistance right here. Okay, price decides to go ahead and fall downward. Okay, resistance, okay, formed right here. Price is falling within a downwards direction. Okay, once again, resistance. And then over here, resistance got broken and turned into support. Okay, resistance got broken and turned into support. And then price decides to go up. So whenever you see resistance get broken and turn into support, that's going to be a good way to go ahead and determine whether or not that area is going to be solid or not to buy. Okay, so look for areas of resistances below current price to see if break and retest is going to happen. Okay, so say for instance, I'm on what's called MRK. Okay, MRK. Okay, as you can see, this area right here is being reacted off of in the same area of support. Okay, one area being bounced off over here, bounced again. Okay, and now we're trying to bounce again. Okay, and if price doesn't bounce there, we could potentially try and bounce at this area of resistance. Okay, guess what? Resistance got broken right here and turned into support right here. Okay, so this is how you read break and retest and really kind of determine whether or not you want to go ahead and buy at a certain area. Okay, a lot of the times too, for certain smaller stocks, you can go ahead and catch certain sweeps. Sometimes it's really, really obvious. Okay, this is going to be a certain scenario where like you want to play shares, something like that. Say something has a resistance way above, and say a stock just released and you expect it to go ahead and sweep up. I would go ahead and buy some shares potentially. Okay, and then you can go ahead and see price sweeping all the way up. Okay, say I'm on Robinhood, for example. Okay, look at this low right here. Someone bought this low, decided to go ahead and catch the resistance gap fill all the way up here from $30 a share to $66 a share, catching the whole V sweep up. So you want to be looking for that V sweep ideally a lot of the times. All right, if you guys need more help trading, StackMODE on that. Catch you guys in the next one. Stay prayed up to God and keep grinding. Love you guys so much. Peace.